There are two reasons why you want to consider investing your money into stocks. Number one is it's time tested. Number two is it's proven the returns. The New York Stock Exchange has been around since 1792.
It is the New York Stock Exchange on Broad Street, America's greatest securities market that perhaps typifies the business of the Wall Street district. Stocks and bonds are bought and sold, and each transaction is carefully recorded to be communicated by telegraph, radio, and cable all over the world.
And the returns are there to back it up. Over the last 100 years, the stock market has grown by an average of 10.49% a year. But let's break this down to see how the stock market has grown over the last century. In 1925, the Dow Jones was trading at around 120 points. By 1955, the Dow Jones was trading at 442 points. By 1985, the Dow Jones was trading at 1,327 points. By 2015, the Dow Jones was trading at 17,500 points. And by 2025, the Dow Jones was trading at around 42,000 points. What we have seen throughout history is that the stock market goes up over the long term. Yes, we see market crashes happen. Yes, we see market downturns happen. Yes, we see recessions happen. But despite those downturns, if we look at the stock market over a long enough period of time, markets have continued to go up, and the belief is that markets will continue to go up. Not in a straight line. We will still see market crashes, we will still see market downturns, we will still see recessions, but over the long term, markets will continue to rise. This is what creates opportunity for you, because now you can also grow your wealth with the stock market by owning a small piece of it. But before I get into that, let's make sure we're on the same page of why the stock market exists. If I start a successful company called Jaspreet Singh and I want to raise some money, that way I can grow my company even faster, I have two options. I can go to a bank or I can go to investors. When I go to a bank, I'm generally borrowing that money. And maybe banks don't want to lend me more money. Maybe I've already borrowed a lot of money. Maybe I don't want to borrow any more money from banks. The other option is I can go to investors and get money from them. Now, generally when I'm getting money from investors, for the purposes of this example, I'm not trying to go out and borrow money. I am giving them a piece of my company in exchange for ownership. So you as an investor give me money, I give you ownership in my company. So I take my company, Jaspreet Singh, and I'm going to divide it up into 100 smaller pieces. Let's just assume that these are all smaller pieces. Each piece is called a share. And now I can sell you 1 share, 2 shares, 10 shares of my company in exchange for money. If, hypothetically, I sell each share for $10 and there are 100 shares of my company. I divided my company into 100 shares. Well, that means my company is valued at $1,000. 100 shares times $10 per share. Now, if I want to go out and raise money by selling my shares to investors, I can go out and find investors like you who want to actually buy my stock, or I can go to the public markets, called the stock market, and sell some of my shares over there. And the way that I do that is by doing an IPO. Initial public offering. And what that means is I'm going to take some of my shares. Let's assume that I'm going to take these shares right here and I'm going to sell them to the public markets. Now, anybody can now buy 1 share of my company and be an owner of my company. The nice thing about this, when I sell 30% of my company, is you get ownership of my company. You risk some of your money, and if my company does well, then you will be rewarded with bigger profits. And for me, it's also good because now I'm getting that money. When you invest your money in my company, that money comes in my pocket. And sure, maybe I can take that money and go on a vacation, but even better is I can take that money and reinvest it back into the company and make this company grow even bigger and even faster, which makes the rest of my shares more valuable as well. That's why the stock market is such a great wealth building tool and how it works. But now you got to understand, how do you actually buy stocks in the stock market? Remember, a company has to go through an IPO to be able to trade on the stock market. Not every company wants to trade on the stock market. Like Chick-fil-A is not on the stock market, so you can't invest in Chick-fil-A. That's called a private company. Other companies like McDonald's are publicly traded, which means anybody can buy and sell them. But how do you actually go about doing that? This is where you need a stock brokerage. Back in the day, you'd have to call somebody and they would execute these trades for you. It was a long and expensive process. Nowadays, you can just download something like Robinhood. Me personally, I like E-Trade, I like Schwab, and I like M1 for my passive investing. More on that in just a moment. And by the way, just for full transparency, I am not sponsored or anything by E-Trade or Schwab. I do have a partnership with M1, so if you want to use my affiliate link, I have that link for you down in the description. The 4 things you want to think about when you're creating a brokerage are fees, reputation, location, and type of account. Starting with fees. You don't want to overpay in fees. Shop around. If your brokerage is charging you really high fees and it's not worth it, then don't go with them. A lot of brokerages are completely free now. Number 2 is reputation. How big are they? How long have they been around? How reputable are they? Just do some Google searches. If they seem kind of sketchy, I wouldn't want to put my money there. Number 3 is location. Can you, based off of wherever you are in the world, invest through that brokerage? And number 4 is the type of account you want to create. Are you creating a retirement account like an IRA? Are you opening a self-directed account, meaning just a stock brokerage account for yourself? Make sure your brokerage will allow you to create the type of account that you want to. The second thing you want to think about when it comes to buying and selling a stock is when the markets are open. Because the markets are not open 24 hours a day like the cryptocurrency market. Generally, you can only buy and sell stocks between 9:30 a.m. Eastern Time and 4 p.m. Eastern Time. And yes, that's Monday through Friday, excluding holidays. And I've already mentioned this, but let's make it explicitly clear. You can only buy and sell shares of publicly traded companies. These are companies that have filed an IPO. You cannot buy and sell shares of private companies. Now that we've laid the foundation, let's get into the fun stuff. How do you actually make money as a stock market investor? And this is where I want to remind you that for those of you that are investors or want to become investors, my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we break down what's happening in things like the economy, stocks, housing, crypto, and the global markets into a fun, witty, and easy to read newsletter. We have hundreds of thousands of investors that are reading Market Briefs every morning. Plus, when you join Market Briefs, you'll also get my investing masterclass, where I'll show you how you can get started as an investor and how you can find those hidden investment opportunities by taking advantage of market craziness. This masterclass and Market Briefs is completely free. So if you want to get the newsletter and the masterclass, all you have to do is click the link down in the description below. There are 2 ways you can get paid in the stock market: appreciation and dividends. Appreciation is when you buy a stock for $100 and it goes up to, let's say, $120. A dividend is when a company is paying you for doing nothing except owning that stock. They just deposit the money directly into your brokerage account. So let me show you how this plays out. In the year 2024, McDonald's started off the year trading at around $290 a share. By the end of the year 2024, the McDonald's stock had grown to $295 a share. So if you owned 1 share of McDonald's, your stock went up by $5. Now, that's not a huge gain, but it's still a gain. This is appreciation. McDonald's stock went up by a little bit. But you also have dividends, because over the year of 2024, McDonald's also issued a dividend which said that they gave every shareholder $7 a share. So you saw your stock go up by $5. But at the same time, McDonald's would have deposited $7 into your brokerage account just for owning 1 share of McDonald's. If you own 2 shares of McDonald's, they would have given you $14. If you owned 100 shares of McDonald's, you would have gotten $700, and on and on and on. $7 for every share that you get. But why does McDonald's pay out a dividend? Well, a dividend is a cash distribution that you get as an investor. And the reason why they do that is because companies like McDonald's have a lot of profits, and then they don't know what to do with this cash. So when a company has a lot of cash in their bank account at the end of the year, there's 3 things they can do. They can save that money for an emergency. They can reinvest it back into the company, or they can just give it away to shareholders, people like you. And ideally, you'd like to see companies do all 3. They want to save some money for an emergency. You want to see them reinvest back into the company to keep growing and stay innovative. And then when they make these profits, you want to be rewarded as an investor. And one way that they can do that is just by giving it away to you as a shareholder, and you get your dividends for every share that you own. Now, I get it. $7 might not seem like a lot. But when you do this for years and decades and you keep working to accumulate more shares, well, it can start to add up. For example, in 2024, Warren Buffett made $775 million in dividends just from his ownership in 1 stock, the Coca-Cola Company. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.